To the NJ show. I hope you're all doing well. I hope you're all doing well. Sorry for the lateness today. I didn't know if there was going to be a stream or not, right? The first question that I've got is, are we live? We need to check that we're live because you know how this thing can be a bit flaky. We are live. We are live. Fantastic. We are live. How is it going, everyone? Get the comments in. Let me know how it's going. Cool, cool, cool. Set one or two things up. It's good to see everybody. It's good to see everybody. I'll do a shout out in just a second. So make sure you get your comments in if you want a quick shout out. We've got a bit of bullishness in the market today. We saw it yesterday. We saw it with silver pushing up first, and it looks like Bitcoin has followed suit. So what's going on in the market? What is one of the main reasons that this market is pushing in the direction is pushing? We'll talk about updates on our trades as well. Obviously, we're in a Solana long, we're in a PYR long. The XRP trade is being monitored. I mean, I didn't take the trade, but we are monitoring it. And we'll talk more as well. Maybe we'll do some altcoin charts as well. But everything is looking quite bullish. And we're going to discuss that today. All right. So let me know in the chat how you guys are doing. Let's do a quick shout out. We've got the first today, which is Yusuf. Welcome to the chat. 1 second. All right. There we go. We got Yusuf. Yusuf says, hello, guys. How are we doing today? All good. Thank you for joining the show, my friend. It's good to see you, my brother. And Elizabeth, my number one. Hi, good. Hope you're doing well. Looking forward to the stream. Thank you very much for joining. Phil, the Flying Frenchman. It doesn't matter what time of the day that I go live. Phil is there. Says, good morning, everyone. Glad NJ's doing a late stream. I'm happy to see you, mate. Cheers for joining. Thank you very much. Lily says, bullish sentiment. Good to see you, Lily. Thank you very much. Crypto AM in the house. Appreciate you, Crypto AM. Thank you for joining the show. And we have got Crypto Mac in the chat as well. Thank you very much for joining. We've got all my brothers here today. Hafuel, my other number one. Cheers for joining the show. Appreciate you, brother. Nick Fedora says, good morning, brother. So wherever you're tuning in from, mate, good morning. Appreciate you. Let me know in the chat as well where you guys are tuning in from. I always get a bit of a buzz whenever I see people tuning in from different parts of the world. So do let me know. We've got Uni Driver that says, in it for the wisdom. I like that. I like that. And we got Fatih here who says, hey, everyone. Hey, brother NJ with a little evil eye sign. Hope you're all good, fam. Hope you're good, bro. Hope you're good. K Deep says he's drinking mango lassi. That's an interesting to be doing on a Tuesday. But good, all good. It's not dinner time here yet. We've got Cleo Finance that says, hey, NJ, let's go. Thank you for joining, my bro. Appreciate you. First time I've seen you. Thank you for joining the show. Appreciate that. We've got Trader SC in the house. Yo. It's good to see you, brother. Thank you for joining the show. It's always an absolute pleasure when you see your family all in the show. All my boys are here today. That's crazy. All my boys are here today. We've got Aromatic. Aromatic says, ES up, Dixie down. Yep, maybe. We'll talk about that today. Min, my brother from Vietnam, says late stream today. Nah, bro, we're early, man. Daylight savings. It's 7 a.m. in the UK, bro. Come on. Twinsy says, we are here again. Let's go. Cheers, NJ. Appreciate you, Twinsy. I'm going to do a few more shout outs and then we're going to kick the show off. All right. Crypto Empire says, what's up, NJ? What's up, bro? Good to see you. We've got quite a few places here. I can see Lebanon in the chat. I could see New York, Morocco, Iowa, Sydney, Australia, Germany, Prague, Dominican Republic. Phew. You guys are insane. And I'll do one final shout out to you, my friend, Ray Al-Farisi, who says 2 a.m. here. I'm trying to stay awake. Well, I hope I'm not going to bore you, mate. We're going to kick off the show and we're going to talk. Now, as always, before I kick off the show, just remember this is an interactive show. So I do appreciate when you guys are getting involved, are giving me your opinions, are letting me know if you agree or disagree or anything like that. So, go ahead and do that. Make sure you're liking the video and do consider subscribing, bottom right-hand corner. It takes a second to do. And finally, before we kick off the show, please make sure that you are looking at the links in the description. They do help support the show. They're not just there for no reason. It's not a gimmick. check the first link. It's the Telegram link. We are trying to get to 1,000 subscribers on that Telegram link, and we are in that final stage. All right, we've crossed that 900 marker. We're well on our way to 1,000. Appreciate all of you for getting involved and helping. Rightio, let's kick off the show, and let's kick it off with a market overview. All right, so what you'll notice today is there's not really sort of much happening in the top 100. All right, you've got these few alts that have outperformed other altcoins, but I'm not seeing any specific pattern. All right, when looking at all these altcoins. Now the beautiful thing is we're seeing a lot of green over the last 24 hours, which is great. It's good for the sentiment. It's great for everybody here. We have to keep in mind that this is most likely going to be a bear market rally, and we'll discuss that as we go deeper into the show. But if we do a little check here over the last 24 hours, we can see that we've got some very peculiar altcoins that have been mooning. We've got Convex Finance, and I've never heard of that before. So that's a new one for me, but it's in the top 100. We've got Elrond. I did see some news on Elrond today. I did see that. So we've got Elrond that's up 12% in the last 7 days, and yesterday alone up 7%, which is quite good in this current market. You know, we've got Chainlink, Polygon, we've got Rune, XRP. Obviously, we know XRP has been bullish for a number of days now. Overall, I'm not really seeing a massive pattern here in terms of altcoins and in terms of how altcoins are performing in this market. All I'm seeing is that we're getting some relief in the general market and altcoins are following suit. Now, in terms of our downers, even our downers, we haven't really got a lot that's down today. Luna Classic, which I know they've got a huge community, they're actually up 8% for the week. You know, they're just down in the last sort of 7 hours. So could it be a pullback? Remains to be seen. RSR has been crazy. I don't know if you guys are following me on Twitter at TraderNJ1. The link is in the description, but I charted up RSR. I marked out some trading plans for that, and it's given a good 30%. So if you're not following me on Twitter, make sure you're going and taking a look. Otherwise, again, in these downers, we haven't really got anything too severe or anything that has a serious community that's down. Even Tron here, you can see Tron is one of the down ones today, but it's not really down. It's down by less than 0.5%. So it's not anything worth really talking about. You know, it's a good day in the market. It's a very, very good day in the market. Here we've got my PYR long. We'll come back to this in a little bit. If we start to break down here, I'm probably going to take profits and reload a bit lower. All right, because it is a range play. All right, so we'll talk about that later. Maybe we'll talk about some altcoins as well. If you guys really want some charts, maybe you guys can drop some comments in, and we'll get some charts going. All right, but what I want to talk to you guys today about is this. Excuse me. I want to talk to you guys today about this. And this is, it says here, the UN warns the Fed to cool the rate hike. So, I mean, if you've been following the show or if you've been sort of keeping up with the markets, you'll know that every time we've had CPI and FOMC, two different events, we've been getting bearish news. All right, news that has not really suited what we believe in for crypto. It's not really done us any justice for crypto. The more we get these inflation problems, the more we have to do these rate hikes to try and control inflation. And the more we have these rate hikes, the more demand that comes in for the dollar, the more demand that comes in for the dollar, the more pressure that is put on the stock markets. And the more pressure that's put on the stock markets means, you know, pretty much all risk assets are going to face detriment, all right, along with the S&P. Now, interestingly enough, all right, and just remember, I'm not a geopolitical expert, all right? I'm here reviewing this news with you guys. And, you know, Cleo Finance is here saying it. He says, both the UN and IMF are begging the Fed to stop raising rates. Yes, they are. Now, you know, this is an interesting one. Before we read this article, it really is an awkward situation to be in, because you've got the United Nations, you've got the IMF. They're saying, look, we need to slow down on these rate hikes. All right. At the same time, you've kind of got to understand it from the Fed's point of view, where the Fed says, well, hang on a second, we want to lower these rate hikes, but at the same time, we need them to get a control on inflation. The only way to really get a control on inflation is with a recession. All right. Now, you know, it's interesting because we've seen in the past that we do need a recession to try and control everything that's going on. That's how they've resolved it in the past, right? At the same time, a lot of people are suffering. Winter is here now. Winter is here now, and we're having those conversations, especially in the UK. I was talking to my barber today, and he was letting me know that there are certain people in the UK that are seeing a 5% mortgage rate. So in the UK, obviously, the same as any other country, you take out mortgage loans for from your bank, and obviously you pay a certain amount every month for your mortgage. For those on a variable rate whose mortgages change as the market goes up and goes down, these guys and girls are getting absolutely hammered. All right, they're getting hammered in the sense that they're not sure if they can pay their rent or their mortgages for the next month. If the mortgage rate goes up, then naturally rent is going to go up too. And this is kind of a horrible thing that we've got in the market at the moment, where landlords are going to try and make as much advantage as they can from this. It's an evil thing, but business is business, right? So with this continuing to go down in the fashion that it's going down, it's one of those situations where people are really, really going to suffer over the next couple of months going into the new year. All right. 2023 is not going to be the best year, and we all know that anyway. All right. We've known that for the last couple of months. We've been on this show. We've been discussing it. We've been bringing you up to date news on this show. And now, yesterday, we've had a sort of semi turnaround. All right. We have to remember if we've got a problem, we're not going to be able to run away from that problem. All right. We can't just hang up our coats and say, oh, I don't want to be involved in this no more. Yeah, I don't care about inflation no more. I'm done with it. We can't do that. It's a problem that's not going to go away. All right. At the same time, if it's not a problem that's not going to go away, then how are we going to resolve it? If the Fed, if the UN are saying to the Fed, well, hang on a second, we need you guys to calm down, is that going to remove the problem, or is that going to just basically delay the problem? Now, I think personally it's going to delay the problem, and that is why I was talking about a bear market rally. Okay, that is why I was talking about a bear market rally. I feel like we're overdue one, and I'm not happy with the one that we had in August. I think it was weak. All right. Now, if you go back on the charts and you look at 2018, look at how the market unfolded in 2018. All right. The bear market for Bitcoin in 2018 was very different to the bear market we're having now. Similar in the sense that we're trending to the downside, but we haven't really had those relief rallies. When I say relief rally, what do I mean? I mean a rally that really convinces people that the bull market is back. Something that makes people think we're back. You know? Something that gets people who left crypto to come back. And, I tweeted this the other day. Let me see if I can find this tweet. All right? Bear with me. Let me see if I can find this tweet. Someone's cutting grass outside, and my allergies are starting to pick up. It's very frustrating. Here we go. I've got this tweet here. Let me bring this tweet up for you guys right here. Bear with me. I put a tweet up here that says, winter is here, and if we get a risk-on environment, a lot of people will think the turmoil is over. They'll get excited at the thought of being rich. A full-on bear market rally would sucker in a lot of people who have recently left and would generate a lot of exit liquidity, in my opinion. All right? So a bear market rally, it's not difficult to suggest that we are on the brink of one. Do I think that the sort of economic turmoil that we're facing at the moment will just simply vanish? No, it won't. It won't, especially overnight, it won't. We're going to need a lot more in order to calm inflation. And we can't really talk about another bull market until we've kind of got this inflationary inflation/recession under control. So looking over here now, I think I've waffled enough. We're 15 minutes in. That was really bad. So the key takeaways here of this article before we go into it is, a UN agency has urged the Federal Reserve to slow the pace at which it's raising the federal funds rate. The Fed has been authorizing steep rate hikes throughout 2022, which we've covered on this channel. We've done the watch-alongs. We've had 75 BPS increases. We've had 100 BPS increases. And there was even potential talks of the last one going up to as much as 125 bps of an increase. So where we are right now is a bit of a sticky situation, and people are starting to talk about it now. The Fed has been authorizing steep rate hikes throughout 2022 in an effort to combat rampant inflation. The UN report argues that poor countries will suffer disproportionately as a result of any imminent recession. So we're talking about the UK, we're talking about Canada, we're talking about the rest of the world. What the UN are really simply saying here is whatever the Fed does has an impact across the world. I'll give you an example. If we're going to talk about the pound and the euro from a market perspective, then, if you don't know this, you're going to learn this now, but the euro is the inverse of the dollar. All right? The pound is the inverse of the dollar. And when you're charting them or when you're trading them, typically what you're going to trade them against is the dollar. So if the demand for the dollar is too high and the dollar continues to soar, what's that going to mean for the pound and for the euro? It's going to mean that they're going to crash to absolute lows, absolutely new lows. And what have we seen in the last couple of weeks? We've seen the pound go to a low that it's not seen since 1984, since well before I was born. All right? And that's quite historic in its own way. You know what I mean? So, what the Fed are doing at the moment, it will affect the rest of the world. And the UN has identified that late as they would. And they've urged the Fed now to chill out. The IMF are also saying the same thing. I don't have a link for the IMF one here, but I've got the UN link here. So continuing on, a UN agency is urging the Fed to slow its increases in federal funds rate to avoid a recession. We must change course. The Fed needs to pump the brakes on interest rate hikes, according to a new report from a UN agency. The report comes from the United Nations Conference on Trade and Development, which annually publishes its global economic outlook findings. According to the UNCTAD, the speed at which the Federal Reserve is raising interest rates puts the global economy at risk of recession, with poorer countries standing to fare worse than richer ones. Now, interestingly enough, I mean, the way that this is written kind of tells me that this is sort of late to the party. This article is pretty late to the party, because a couple of weeks ago, the Fed were openly saying, we covered it on this channel here, that from good sources, mind you, that the Fed were forcing us into a recession. They were trying to speed us up in terms of going into a recession. And why were they doing that? They were doing that in an effort to combat rampant inflation, as we can agree. All right. We need inflation to calm down, because if inflation can calm down and we can slow down our growth, we can get back to a stage where we need growth in order to stimulate the market. All right. Right now, growth wouldn't stimulate the market. It would put us in more of a situation. So essentially speaking, credit is not good. Nobody should be taking out loans. Nobody should be taking out debt. It's the worst time to be taking out debt at the moment, because the interest that you're going to have to pay back on that debt is going to be the worst it's ever been. All right. To put it in simpler terms, I don't know, let's say, for instance, you want to buy an iPhone 13 Pro Max. Maybe 2 years ago, you could go to a store and you could say, hi, I'd like to buy this iPhone, but I can't pay it outright. I'd like to take it out on finance for 12 months. And they say, yeah, sure, no problem. We'll give you 0% interest on your iPhone. Now it wouldn't be quite the same case. And maybe retailers haven't been affected to that much of a degree early on, but mortgages certainly have taken that hit. All right. And we're talking about absurd prices. Like I said earlier on in the show, 5% on your mortgage is incredible. Imagine you've got a £1 million house. I mean, a lot of people don't have a £1 million house, but even if we're talking about sort of 500K, 5% a month interest on that type of loan is not a joke. It's not a joke. All right. And that is going to seriously impact how people live going throughout the winter, because it's not simply just the mortgages, but it's the energy bills as well. Energy has risen, not risen. My English is all off today. I'm streaming at a different time, that's why. Okay? I filled up my car today. A year ago, to fill up that car would have cost 40 to 50 quid. And now it's costing 80 to 90. All right? On a flat tank, it's costing £90 to fill up that tank. Nearly double what it was a year ago. All right. So it's not just mortgages, it's not just rent, it's also energy. And that's just petrol. We're not talking about electricity, we're not talking about water, and we're not talking about natural gases. All right. So that's the situation that we're in. And the UN are essentially telling the Fed to take a chill pill because it's affecting the rest of the world: Europe, UK, Canada, US. All right. So moving on from this. Under the leadership of the chairman, Jerome Powell, the United States Central Bank has raised interest rates 5 times this year. Most recently in September. On that occasion, the Fed raised the federal funds rate by 75 basis points, bringing the benchmark rate to between 3 and 3.25%. For perspective, the federal fund rate started the year at nearly 0%. So if there's anything to take away from that, I mean, you can see it here. You can see it right here. This particular line here, for perspective, the federal funds rate started this year at nearly 0%. Okay? It's quite ridiculous. And as professionals in the space, whether you're here because you've got a degree, or because you love finance, or whether you're a crypto person who's trying to make it in the crypto space, this is something that you do need to understand. This is absurd. All right? What an interesting year to get into finance, huh? The Fed's overreaching goal behind these rate hikes is to tame inflation. Coming in last month at 8.3%, 2022's inflation rates have alarmed investors and consumers alike. The average cost of food, for example, has risen 13.5% in the United States since August 2021. Now, I did an episode covering CPI. I always do that. I always do an episode covering CPI. I do an episode covering FOMC every other month. All right? I think we've got CPI next week. Right? I always do those episodes. And when I do those episodes, one of the good things about it is we not only do we keep on track with what the Fed's doing and we bring you the latest news, but at the same time, we can sort of determine the patterns that are unfolding in front of us. And one of the things I mentioned was the cost of food. All right. We did a solid CPI breakdown in the last CPI episode that we did. We got a good amount of views on that as well. So do check it out. If you haven't, you can scroll down the playlist and you'll be able to find the CPI episode I did. This would help you understand a bit more about what CPI is, what the components are. And I break it down in a way for you guys that sort of speaks in layman terms. All right. So do go and watch that. And food, obviously, along with shelter and typical expenditures every month, fall under that CPI category. And that's why it's talking about 8.3% here. Now, we've already mentioned just now, we've spoken about petrol, gas, if you're in the US. We've spoken about natural gases. We've spoken about energy. We've spoken about shelter. Now it's talking about food. If all of these costs are simultaneously building up, the end of the month is not going to look pretty for many people. And even my dad sent me a message very recently saying, yo, take it easy on the heater, because he's now received his energy bill for the coming quarter, and it's not looking good, bro. It's not looking good. So moving on. The article says, however, the UN agency is claiming the Fed's actions may be too dramatic and may push the global economy into a recession, which the Fed have openly said they want to do. Any belief that they, the central banks, will be able to bring down prices by relying on higher interest rates without generating a recession is, the report suggests, an imprudent gamble, it said in a statement accompanying the report. Now, it is a gamble, theoretically speaking. It is a gamble, but has it worked in the past? Yes, it has. Will it work in the future? Well, we can only work on hindsight. All right. We have to remember that the Fed printed a stupid amount of money in 2020. March 2020, we also had rates, right? We also had rates that were being determined in March 2020. And what were the results in March 2020? They were minus 100 BPS, minus 75 BPS, minus 50 BPS. Nobody was talking about rates back then. Nobody was talking about what turmoil that could lead to within the current market that we have today. But here we are. Okay. So, markets go up and down. We know that. All you can do is catch the trend and trade the market for the trend that it's giving you. Most people can't do that. Most people don't know how to. Most people don't even know what questions to ask. But we're getting to a stage now where, especially within this community, especially when you've got the NJ show that's growing in the way that it is, we're getting to a stage now where we're beginning to really understand these things and really, really get a grasp of what we're seeing. And hopefully that will help us going into the next bullish trend. All right. Now, I know that the market is going up. The market is pulling back a little bit right now, but we are going to talk markets in the near part of this episode, so stay tuned. All right, make sure you're liking the video as well. Give me a like spike. We're at 40 likes, but we've got 70 people watching. If you're watching this recorded for the future, help us get to 100 likes. I like to get to 100 likes for every episode. I know I've come on a little bit late today, but don't punish me. Don't punish NJ. NJ loves you. All right, so if you want to use only one instrument to bring what's happened here, excuse me, if you want to use only one instrument to bring down inflation, the only possibility is to bring the world to a slowdown that will end up in a recession. Now, notice this, guys. Notice how this is exactly the opposite of COVID. This is exactly the opposite of COVID. When COVID happened, we were all in a state. I mean, I don't know about a lot of you guys, but I was working in central London at the time. I was working at a bank in Canary Wharf. And I'm telling you, it was nuts. Every office around us was panicking. Everybody was trying to quickly build a working from home solution. Building a working from home solution isn't that simple if you've got many employees. If you've got 200, 300, 400 employees, you're going to need the infrastructure to do that. You're going to need load balancers. You're going to need firewalls. You're going to need many servers that can handle the data that's coming into it. You're going to need to segregate your network so that the VPN network doesn't clash with the office network. Everybody's going to need to be able to remotely connect to your office in order to access data, in order to work smoothly from home. And on top of that, you lose the ability of having someone sitting right next to you. I've been on Twitter for years. I can talk about a bunch of stuff on Twitter, but it's not the same as me coming live and breaking it down for you here, giving my opinions and asking you guys to share your opinions. It's not the same. All right. So this is pretty much the exact opposite of COVID. During COVID, we had to speed everything up. We had to get everybody in a position where, in order to not die, in order to not contract the virus that could potentially kill you, we need to get you to go home. And in order to do that, we needed to speed up the technologies that we had. Fast forward 2 years later, and we're at a stage now where a lot of people can comfortably work from home. In order to do that, a lot of money needed to be pumped into the system. All right, we're going to bring it all over to Bitcoin towards the end of the episode. So if you are getting a little bored and if you are wondering why is he not talking about Bitcoin, stay tuned. We are going to bring it all back to Bitcoin. It says Trader NJ, but I'm more like Crypto NJ, if anything. All right. The current course of action is hurting vulnerable people everywhere, especially in developing countries. We must change the course. So at least they're putting a hand up now and saying, yep, they're destroying everywhere and people won't be able to afford anything and they won't be able to live normally. It's going to cause a lot of problems. In the UK especially, crime used to be a really big thing here, man, in North London and South London and East London and other parts of London. It used to be a really big deal here. And if the markets continue to behave in the way that they're behaving and nobody can afford anything, then what's going to happen is parents are going to have to work double time to pay their bills, and their children, their teenagers who have nothing to do, they're going to be out on the street walking around the roads late at night with no money in their pockets, looking to take money from people who do have it. It's what teenagers do. All right? That's how London is. And I'm sure other parts of the world are going to suffer the same fate. Now, crime going up is that takes it to a different level. Poverty is one thing, but crime, that's going to take it to a different level. And I can see, reading in between the lines for everything here, I'm seeing that they're trying to avoid that. All right. So what they're saying here isn't that they want to stop the rate hikes, it's that they want to slow it down. So we have to keep that in mind as well. As we said earlier on in the episode, the problem isn't going to go away. The problem is going to remain. But how we tackle the problem and how we deal with it, that's what they're saying needs to change. So, pain ahead. The aggressive rate hikes are the Fed's primary tactic to combat inflation brought by emergency quantitative easing during the COVID-19 pandemic from 2020 to 2021. Those measures, which included billions in cash payouts to taxpayers, emergency small business loans, what I was talking about a second ago, medical equipment purchases, vaccine research, and dozens of other purposes, prompted the Federal Reserve to effectively issue new currency on an unprecedented scale. To give you context, it was roughly around $6.4 trillion that they printed out of thin air. Pick your favorite cryptocurrency, pick your favorite token. Yeah? And imagine you woke up this morning and the team decided to drop news that says, hey guys, we're printing 6.4 trillion tokens. Your token would dump to zero and it would turn into the next meme coin. Example, Luna. All right. Look what happened with UST and Luna. Does it sound quite similar? All right. So, passed in haste and under threat of emergency, however, COVID relief legislation packages also included significant pork barrel spending or monies wrangled into a legislation package by senators and members of Congress looking to bring funds back to their home states and key constituents. By some estimates, up to 35% of the 5.2 trillion spent on COVID relief over the last 3 years were such pork barrel line items. Further exacerbating the problem is the price tag on President Biden's Americans Rescue Plan, which accounts for 1.9 trillion and will be paid for, or at least in a part, by the central bank extending further credit. We had news today as well. I don't have it up here, but I do have it up here. Bank of England. All right, yep, sure. All right, we'll talk about that shortly as well. The time has come, however, to pay the price for all that money printing. So the effects of COVID is now being paid for today. That bull market that we had today is the consequence of that. All right. This whole year, this whole bear market that we've had, yes, the chart looks the same. And in 10 years' time, we're not going to remember anything that's going on today. But this is the reason for our bear market. Okay. And we have to get on board with that idea. And we have to be open to the idea that in terms of bringing down inflation, we need to prepare for an even worse scenario, which is continuation in the rate hikes, continuation in the energy crisis, continuation in the overall financial crisis. Okay, we need to be alert. We need to be prepared for it. And if you believe in crypto like I do, and if you believe there's going to be another crypto bull run like I believe there will, then what the best thing that we can do is right now is two things. Number one, survive. Okay, not financial advice. Do as you please. I'm not a financial advisor. I'm not a geopolitical expert. I'm just here trading the market. I love cryptocurrency. I'm here bringing you the latest news. All I can say is survive. That's what I did in 2018 when I lost a crap load of money from the 2017 bull run. I survived. And during my survival, I spent ages on YouTube, on Twitter, on reading through articles, learning about traditional markets, learning about cryptocurrency, learning price action from Trader SC, learning macro analysis from Trader XO. That's what I did. That's all I did. Credit goes to them, really. That's all I did. And when the next bull market came, guess what? The difference between me and others was that I was prepared. Others weren't. Preparation is key going into the next cycle. I promise you. That's the only advice I can truly, truly give you. And Phil says it here. We'll go through some comments in a moment, but Phil says it here. He says, when people are hungry, they have nothing to lose. He's probably talking about the crime thing that I was mentioning earlier on, but yeah. So the next thing that we're going to be looking at here is how the changing economy and midterm elections will affect Bitcoin and Ethereum prices. Now, we know that money has been leaving crypto, all right? Money is exiting the market. Our global market cap for crypto continues to downtrend, sorry. Okay? And yes, we are talking about a bear market rally. The sentiment is good today. It's good to have an episode like this where I haven't got a sort of a headline that's saying Bitcoin is pumping, let's go. This episode, I purposely wanted to do it normally so that we could sort of bring our legs back to the ground. All right, we need to stay grounded in environments like this. If we are going to get risk on, it's not going to be permanent. It's not going to signal the start of a new trend. All it's going to do is generate more exit liquidity to fuel another leg down. Okay, that's what a bear market rally is, to summarize. All right, so what we need to do is we need to not delude ourselves into thinking that Bitcoin is going to 100K. We need to not delude ourselves into thinking that Solana is going back to all-time high. What we need to do is play the direction of the trend for the time frame that it's playing in. Okay? I spoke in my last episode, which was yesterday, and I spoke to you guys about what a macro bottom looks like. And right now, we haven't really done anything to signal a macro bottom. Now, if we're going to start pushing up from here, most likely it's going to be a bear market rally, given the news that we've got, given the data that's circulating around the market, given the current circumstances that we've got. All right. So Bitcoin and Ethereum have had 3 consecutive quarters of poor performance this year. To summarize that in one line, a bear market. And yet plenty of experts are surprised they remain as strong as they are. Suck your mum, innit? Where the crypto community are unbeaten, bruv. You can't chat like that to us. The tokens have been surprisingly and relatively resilient and stable over the last week, while other assets have tanked. Most notably, the stock market plummeted last week and entered a bear. Bro, we've been in a bear market for a year. Who writes these articles? I swear to God, who writes these articles? Following the Federal Reserve's announcement that it would hike interest rates for the 5th time this year, obviously we know that today the UN have come out and asked them to pause that rate hike. Bitcoin has struggled to stay above $20,000 over the past month at a key price point for the token. Bitcoin has ranged between 18 and 20K, blah, 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 blah. I'm not liking this article. Fuck this article. Bullshit. I'm not putting that in the stream. Absolute bullshit. When I read it earlier on, it didn't read like that, but it's bullshit. Whoever wrote that, no, you're not good at what you do. Right. So Bank of England to buy 65 billion pounds of UK bonds to stem rout. Okay. So this is another sort of bullish piece of news here for the short term, not for the long term, for the short term to try and slow down the current situation. All right. So let's have a quick look at this. The Bank of England stepped into Britain's bond market to stem a market rout, pledging to buy around £65 billion or $69 billion of long-dated gilts after the new government's tax cut plans triggered the biggest sell-off in decades. All right. Now, this whole Liz Truss situation, it's very, very difficult to understand the direction that she wants to go in. I can't personally understand what she's trying to do. She's telling us that she wants to slow down the bear market. She wants to slow down the problems that we've got, but then she's not really giving us any concrete plans as to how she plans to do that. It's like me saying tomorrow we're going to pump Bitcoin through this stream. And this message, it goes viral, it gets sent out to everybody. We come on the stream tomorrow, I'm here, as I promised you I would be, and I say, right, it's time to pump Bitcoin, and then I have no plan, and then it just doesn't happen. So we need to kind of be alert from that point of view as well. All right. Citing potential risks to the stability of the financial system, the Bank of England also delayed on Wednesday the start of a program to sell down its £838 billion of government bond holdings, which had been due to begin next week. where dysfunction in this market continues to worsen, there would be a material risk to the UK financial stability. This would lead to an unwarranted tightening of financing conditions and a reduction of flow of credit to the real economy. So, like we were talking about sort of 30 minutes ago, talking about taking out finance, talking about buying a house, buying a car, it's not going to be easy to get credit now. Okay, for the next year, it's going to be very difficult. Spending is being discouraged. Any spending is being discouraged. Tightening it across the entire board. All right. And what I mean by that is not just from the top down, it's from the top all the way to the bottom. And that means how much you spend on, I don't know, going to the cinema. It goes as far as that. All right. It's being discouraged. And in fact, one of the cinemas in the UK, my childhood cinema, which has been around all my life, they've gone bankrupt. They announced it a month or two ago. They said that they can't keep up with the current climate of things and they're going to have to declare bankruptcy. They filed for a Chapter 11. So it's not just us, it's not just them, it's everything in between as well. Tightening happened across the board, starting from pulling liquidity out. All right, I've given you that example yesterday, all the way down to, going for a local kebab, going for a kebab on a Friday night. Instead, it's better to stay home and eat bread and butter. That's what they're saying. The central bank said it was still committed to an £80 billion cut over the next 12 months in its holdings of bonds bought after the global financial crisis of 2008 and during the COVID-19 pandemic. British 30-year bond yields had hit their highest since 2002 earlier on Wednesday, and traders said that it was becoming increasingly hard to buy and sell bonds as no one wanted the risk of holding such a volatile asset. Now, this is the thing when it comes to cryptocurrency. The reason that it's so difficult for institutions to really get on board, the only reason that they really started getting on board in the last year was because we're becoming less volatile as the years go on. All right. If you look at the last decade of Bitcoin, you can't compare last year's volatility to the volatility we had in 2013. All right. Bitcoin itself was a shitcoin in 2013. All right. And now, moving forward to 2022, Bitcoin looks to be the next sort of financial safe haven. People are comparing it to the dot-com bubble that lasted for 30 years or something like that. All right. So Bitcoin is the next gold, digital gold. All right. The next financial freedom. So obviously now institutions will start to step in as the risk becomes less. But now, interestingly enough, obviously bonds, they're not moving in 0.5% anymore. They're not moving in 0.01%. They're moving by the percentage, going from 0 to 3.25 in a year, as we saw earlier on. That's not a joke. That's a huge increase. The people that buy bonds and trade bonds, they're trading with millions and millions and millions and millions. And their orders get filled like that. They don't take any loss or any detriment in spreads and stuff like that. That's for people like me and you. All right. For it to move 3%, people don't want to buy it. People don't want to sell it. If you want to buy it, then you're buying a potential top, because at any point in time, the UN can come out and say, yo, can we chill out on these rate hikes, which would bring everything back down? Or if you're looking to sell it, then who's going to buy it? This is an old school market. Who's going to buy it? The markets will move anyway. They'll move anyway, but the consensus remains the same. The thought process has to be the same. All right. So these are schemes running out of cash at the moment. One pension consultant said before the BOE intervention, this was a response to a fairly specific issue with the LDIs and the relationship they have with pension funds. Okay, it starts to get it's a temporary intervention. Here we go. The BOE last intervened in the gilt market to stem market turmoil in March 2020. That's the clue. Everything that's happening here is the opposite of COVID. So whatever happened during COVID, however you positioned yourself, if you won during that time, you got to be positioned doing the opposite. When the pandemics roiled the market, expanding its then dormant quantitative easing program by hundreds of billions of pounds. So that's the, think of it as like what I was talking about earlier on with the Fed, decreasing the basis points. We had a decrease of 100 basis points. All right. So it's the same thing as that, but the Bank of England version. Markets have balked at the unfunded tax cuts that formed part of a new finance minister's first fiscal statement on Friday. The Bank of England have put something on the floor of a floor under the market in the short term. Okay, so think about, I don't know, think about PYR. All right, we're long PYR, and then you're looking on Qcoin, and somebody puts a $2 million buy order at $4 or something like that. That's kind of what they're saying for the overall market. So the Bank of England have put something of a floor under the market in the short term. We put up a buy wall. However, the pro-cyclical fiscal policy remains, and as such, the respite may not be long lasting. What does that scream to me? Bear market rally. That's what that sentence says. For those of you who don't understand, bear market rally. Look at GBP, look at Euro USD, look at the dollar, bear market rally. Okay? S&P, look at it. Look at it. Go look at it. We're up crazy on the S&P, up crazy on the pound, up crazy on the euro. Every pullback looks like a push towards the upside, but as you can see here, bear market rally. Do not get suckered into thinking that this is going to lead into the next bull market, because it won't. All right? Give us a like spike if you can. Do like the video. It does help support the channel. Make sure you're subscribing as well, bottom right-hand corner. All right? Cheers. Appreciate all of you for the support. I can see it's very quiet in the comments as well. Get your thoughts in. Get your comments in. I know we're streaming at a later date today. I know that there's a lot of you who are pretty much new to the channel, who aren't used to it, but get your comments in, all right? Get involved with the NJ community. What are you doing if you're not getting involved? So moving along, all of this just summarizes bear market rally, and that's the end of that. Okay, the last thing that we're going to talk about today before we move over to the charts, right, is FTX has listed dollar. All right, now typically in bull markets, what we tend to sort of discover is that whenever FTX lists something, it tends to dump on the listing. All right, it tends to be the collapse of that coin as soon as they list perps, a perps index. All right. Now, perpetual index is what I was looking to say before I got caught in a stutter. Anyway, that said, FTX has listed DXY. So that's interesting. That's going to be very interesting going into the next market. And look at the comments that are coming in saying, it's the top for the dollar, bottom is in for crypto, up only can resume, the top is in for the dollar, DXY, top, RIP DXY. And then we've got some nonsense comments here. But essentially speaking, this is kind of bullish in a way, I guess. Kind of bullish in a way. I don't think it's going to cause that much of a big deal, but it's news that's worth talking about. So we're bringing it here for you guys to discuss. All right. Give me your opinion on this. Do you think that the top is in for the dollar? We're going to look at the charts in a second. All right. But in fact, if we go over to the charts now and we have a quick look at the dollar, the way that I've got it looking for the dollar was like this. So if we go over to the weekly on the dollar, one thing that I marked out was an overall channel that we've got here. Okay. We've got an overall channel that we've got here. Now, a lot of people are looking on the daily time frame, and there is a smaller channel within this channel, but I'm not going to fight the higher time frame. The weekly constitutes 7 daily candles wrapped in one. Okay, so I'm not going to fight that. And also, if we look at the monthly, that channel is even further respected. Okay, so what I'm looking at here for the dollar is I'm thinking that the dollar is going to range around this area. Okay, we're going to start doing something like this, a sideways type thing. Okay, maybe we can push up a little bit, but essentially I'm looking for overall a breakdown into the range, and then we can start making our way back to the bottom of the channel. Whether we break out towards the downside or not, if we look in the past, let's have a look in the past, okay? Because we're on the monthly time frame, this chart starts from 2008. We didn't even have Bitcoin when this channel started, All right. Where did we have Bitcoin? We had Bitcoin in 2013. So 2012, 2013. We didn't really have much going on here. 2016, 2017, what did we have? We had Bitcoin here, December 2016. We know that January was the beginning of the bull market for Bitcoin, January 2017. What did the dollar do? The dollar tanked. Where did it tank to? It tanked to near enough the bottom of the channel. And notice as well how if we don't tap the bottom of the channel, the price tends to come back and find it. It seems to be a magnet. Notice here how we did the same thing in 2000 and let me remove this. We had the same thing here in 2009. We didn't tap the bottom of this channel. So before coming up to tap the top, we found our way to the bottom. Little deviation, get back above, hold, sideways price action, and then we pushed up. Okay. And then we had the 2021 bull market. We had the COVID crash here. Okay. Right here is where we had the COVID crash. And all of this here was the 2021 bull market. All right. Up until right here, November 2021, where we had the top for crypto and the dollar began to soar into the top of the channel. So what I'm looking for here for the dollar is I'm not really surprised seeing the dollar do what it's doing now. We are at very, very clear resistance that goes back as far as 2007. Could it be bullish? I don't know. We've tapped the top of the channel. Every time we've tapped the top of the channel, we've gone for a breakdown. So if I divert your attention to this area right here, I'll highlight it for you guys right here. This is a solid range bound environment that we've got right here. And what I particularly like about this sort of box that I've highlighted here is I like the fact that price is going sideways. Okay, I like the fact that we're doing this. So I'm not saying the dollar can't go higher, because if we follow suit here, and if I mark out, if I do this, right? So if I do this and I bring it all the way like this, right here like this, I'm not saying that the dollar can't go higher. Of course, we can go a little bit higher if it wants to deviate, but the fact is that the overall trend, the trajectory of the trend isn't in so much of an uptrend anymore. It's more bent towards the downside. Okay, so you see here 1 touch, 2 touch, 3 touch, and then we start breaking down. Now, there is one other thing that we need to pay attention to as well, and this is the bearish scenario for the dollar. The bearish scenario is what we've got marked out here, but the bearish scenario for crypto is, well, we've got 1 tap here in 2007, another tap here, that's 2. We can use this as 1 more tap, that's 3. We've got a 4th tap now. Okay, so if we're going to start breaking to the downside, then what do we have here? We've got 1, 2, 3, 4 taps to the downside. So really what's going to happen next, I think the next issue that we have is going to be very heavily dependent on this chart. If we come all the way back to the downside, we'll be tapping the bottom of this channel for the 5th time. And for those of you who study support and resistance, you will know that the more times that we tap a channel, the more times that we tap a support level, the more chance of it breaking. If we come back down and we come back for the top of this channel, then we're going to be tapping that range high for the 5th time. So what if we get a breakout? Now, if we get a breakout to the upside for the dollar and we start looking at much higher prices, this could be, yeah. I mean, I can see it in the comments here already. Get your comments in, by the way, people. Get your comments in. I do like listening to what you guys have to say. We're at 60 likes as well. If you guys could give me a like spike there as well, get us to 70 if you can, maybe, as we transition towards 100. But if we do break to the upside, I'm not gonna lie, I don't know what's going to happen next. We'll have to see. We've got clear resistance here at 120. That should cap the upside. I don't know if we're going to get as far as 120, but based on this channel that we've got here, it's a 20-year channel. I'd be looking to play the range, a tap to the upside, and then maybe push towards the downside. All right, we'll see how the rest of the market is reacting. If we're getting bearish news, if we're getting more rate hikes, if we're getting continuous problems within the market, then we're going to struggle, all right? It's going to be pretty shit, if I'm honest with you. I want a bull market just the same way you guys want a bull market, but it's going to suck stuff. All right. At the same time, if we was to break down, I'm really liking this area right here. I'm loving this area right here. Let me turn this into a different color. I'd love to see a bull market. I'd love to see a bull market for Bitcoin and altcoins, Ethereum and whatnot, with Dixie tapping that range low for the fifth time and breaking down right into this channel. Now, I'm asking for something really stupid here, right? I'm asking for a 35 to 40% correction in Dixie over the course of the next 2 years. Can that happen? I don't know. I don't know. Okay. Now, if we look at the 3-month chart real quick, notice how this channel continues to deliver. Okay. I really, really have some confidence in this price action just because we've got so much data that confluences it. Why would you fade this? If you've got data going back all the way to 2007, this is not the 5-minute chart, my bro. Why would you fade this? You know, we're at clear resistance. Yes, we can come back and tap it a couple of times, but this is where the resistance is. So, I'm at two minds right now. If you watched yesterday's episode, in yesterday's episode, I said, there are signs that the market is giving me that leads me to potentially believe that maybe the next bull market may not be 2024. It might be as early as summer 2023. I don't know if that's going to be the case. We will see as the market unfolds. All I know is I'm not going to be fading this. I'm not going long on the dollar right now unless we have some sort of a breakout. I'm not going short either right now, but you guys know that I've longed a couple of altcoins. I've been very, very transparent about it on the show, and I'm kind of waiting to see what happens, whether I get stopped out or whether it rallies to target. All right. So that's my take on the dollar. Now, obviously, if we're saying that the dollar should be leaning towards the downside, and in fact, I'm going to tweet this. I'm going to tweet this. All right. So if I sort of do this, I'm going to tweet, why would you fade this? Oopsie. Let me tweet this. All right, so I've tweeted that. Make sure you guys are following me as well over on Twitter at TraderNJ1. All right, links in the description. You should be able to find me on Twitter. Appreciate all the love that you guys give. I'm approaching 50,000 followers on Twitter. We're roughly around 300 away. So, yeah, we're exactly 300 away from 50,000 subscribers on Twitter. So, do your part and definitely get involved. Make sure you follow me on Twitter as well. All right. Now, moving on to Bitcoin. All right. We'll have a quick look at Bitcoin. We'll do a little Q&A, and then I'm going to shoot. Moving on to Bitcoin, we're starting to see some flat body candles here. Not flat body. We're starting to see some compression here. All right. Now, you guys know that this is a new quarterly candle that just opened 3 days ago. So we can't really get much from that. But I wouldn't be surprised at the same time if we did get a bit of a rally. How high it can go, it's difficult to say at the moment. I would not constitute the last quarter's candle as a bear market rally. If we do dig in a little bit further to the monthly, we are starting to turn a little bit. It's not looking the same way it was looking here. Notice here, look at the way that price curves. All right. Price curves to the downside. Price here in February 2022, it curves to the downside. Over here in July 2022, it's curving to the downside, but we're starting to get a curve towards the upside now. So whether it's going to hold or not, it just kind of adds a bit of confluence with the dollar being trapped in that channel too for a bear market rally. Now, what do I think is going to happen over the course of the next month? We could have some upside if we go over to the weekly now. We could have some more upside. Let me remove this. we could have some more upside to go up, right? Where can we go? Well, the clearest resistance that we've got here is this first resistance here at 22.3K, and the second one here, which topped out our most previous bear market rally in August at roughly around 25K. Okay. Now, I'm not saying that Bitcoin can go to 30K here, but at the same time, I'm saying that Bitcoin can go to 30K. There are cases that we can build for it if we're going to play longs and shorts. And then what we'll do is we'll play it level to level. Bitcoin has a key level here at 20,800. We'll play it there. We'll see Wagwan. We've got a key level here at 22,300. We'll play it there. That's going to be major resistance. 25K is going to be major resistance. And if we break out, I just get the impression that a lot of people will think the bull market is back, you know? And if a lot of people think the bull market is back, that would kind of be the perfect time to send the market lower. Do I have an example? Yes, I do. Here's your example right here. I refer you over here to January 2022. Now, look at this range that we've got here for January 2022, right? We've got clear resistance here at $43,000 for Bitcoin. Now, what happens is we close below 43K here, and then we sell off. We get back to around 43K, we close below it, we sell off. We get back to around 43K, what happens is we close well below it and sell off. Now, what happens here is we get above 43K. Look at this right here. March 2022, we get back above 43K and everybody is calling for the next bull market. Go on Twitter, have a look at what people were saying in March of 2022. All right. And look at how we held support lovely here at 38K. We held support and we're starting to push up only to close back below that 43K level and sell off. And that's what I think could happen here. I think that we've got a key level here, all right, in May 2022, which comes in at around $30,000 for Bitcoin. We've sold off below it. We couldn't hold above it, and we've sold off. Notice here on the left-hand side, every time we held 30K, it led us to a spike, a move up, a momentum towards 69K. And every time we closed below it here in 2022, we sold off aggressively. All right. So for me, the natural magnet for price, the last time we had, sort of an incredible thrust to the upside or downside was at 30K. Even if we look at this up move we've had here towards 25K, notice how we didn't take out these lows. The lows of June 2022, we never took these lows out. So this up move that we've caused here is a bit of a shitty up move, isn't it? An up move like this is an up move. Look, in March 2022, this is the up move that sent the market lower. In December 2021, that was the up move that sent the market lower. In January 2022, that was the up move that sent the market lower. But this here, it hasn't really taken out any lows. So it makes me start wondering, if we zoom out on this chart and we make it look clean, we've got some clear targets to go for here. We've clearly got this 25K level here, which has acted as previous resistance. And then if we were to get a proper bear market rally, I'd argue that we could go up to potentially 30K. All right. It might get front run at 26, 27, 28, 29. We'll have to play the game as it gives us the game. But that's what I'm thinking. All right. And it makes me think as well, for PYR, I'm not shilling my bags, but I am shilling my bags. PYR, how high can it really go? How high can it go? I'm looking at I'm really and truly looking at $5 for major TP, right? That's major TP. And I've marked out my range high here at $7 But in terms of how high it can go, if we're looking at where sort of major support and resistance was, we're looking at around here-ish. Okay, the last time we got major sort of resistance was here around $8.30. Okay, so I'd be looking to eye out PYR in that sense as well. I'd be looking to see how high this thing can go. Bear market rallies, the up moves that sent the market down. Look for those up moves. Where have we got one? We've got one here in January 2022. This was an up move and it sent the market lower. It took out the previous week's lows. We had an up move here again in March. Okay, took out the stops here, sent the market lower. Here, it's kind of showing me a sort of leveled out accumulation. That's kind of what I'm seeing. Price is looking very, very straight. It's not looking trendy. It doesn't look like it's trending to the downside. It doesn't look like it's trending to the upside. It looks to me like we've got some accumulation going on. Where have we seen accumulation before? We've seen it here. Okay. What happened when we saw it here? Boom, massive move to the upside. What happened when we saw it here? Boom, massive move to the upside. Now, we can't say that, this rally is going to be a rally that takes us back to $50. No, not at all. But we can look for the up moves. The big up moves were here. These were the big up moves. And look at this candle here that we've got in April 2022. That was the wick that really sold us off into the range. So if you sort of mark this out here, we've kind of got $14 here. And I'm not going to lie, I can really build a case for $14. Now, that's stupid. I understand that. I understand it's a 4x from where we are here, but the market will remain much more insolvent than you will remain sane. I've seen it before. Okay, in 2018, we had two bear market rallies. We had one in 2018, one in 2019. And in those bear market rallies, each time my favorite altcoins, they rallied 4x. Each time. I'm not saying it's going to be the exact same thing in this market, but we did not get that in August 2022. We just didn't. Okay, the market rallied. Did altcoins really go bonkers? They did them 2x. Some of them did 50, 60%. It wasn't a real bear market rally. Or each of us, the general consensus, the statements on Twitter, the consensus is that we're still in a bear market. People are talking about macro. People are talking about economics like they've studied it all their lives, I being one of them. At what point are people going to step in and say, yeah, do you know what? Screw the bearish guys. We're going higher. Where's the bulltards? Where are the people that are saying Bitcoin is going to 100K? Where's the exit liquidity? You guys aren't buying here. People, I see a comment up here saying I was too scared to buy PYR at $3 because you are in a bearish sentiment. And the bearish sentiment is continuous over this market. We're consistently seeing it. All right. So we need something that's going to get us bullish. And I'm seeing the signs. All right. What are the signs that we've got for this bear rally? Well, the first thing that we've got is the UN, IMF have come out and said, yo, can we chill out a little bit on the rate hikes? Number two, we saw silver spiking like crazy yesterday, which means that we're slowly getting that risk on environment. Okay. Gold, the SPX, the pound, the dollar breaking down, the dollar being at key resistance, which I've shown you guys. All right. We're getting that movement now. We're getting that movement where I'm starting to see the sentiment will start shifting. People are going to look at this temporary pause in the market, temporary pause in these rate hikes. They're going to look at these and think to themselves, yeah, it's over, bro. Finally, the worst is done. But no, they're pausing it. If I say I'm going to knock you out and I say I'm not going to do it after school today, but tomorrow after school, you're effed. Of course you're going to sleep good tonight, bro. Of course you're going to sleep fine tonight because it's tomorrow that I'm going to be looking for you. Of course you're going to be walking home fine after today's school session. Tomorrow is the day that you're going to get it. So like I said at the very, very beginning of the episode, you can't run away from this problem. The problem's there. You're not going to be able to run away from it. But you are going to be able to slow it down a little bit, and that's what they want to do. The Fed wanted to speed up this recession, so if we stand out in the cold for long enough, then we'll be able to power up the heat in the house for years to come. If we stand in the cold for 2 minutes, we're going to come back into the house, and the house will only heat up for 2 minutes or 3 minutes or whatever. And the UN are now saying, let's pause that. Also, I haven't covered it in today's stream, but I'm seeing stuff like McDonald's accepting Bitcoin in Sweden or Switzerland or something like that. So we're getting all these same patterns. All right, we're getting the same patterns. So watch out for those. Watch out for all of that. I feel like I've delivered good content to you guys today. I feel like you guys should be prepared to handle the market going forward. If for some reason a bus hit me today, God forbid, you guys would know. NJ said this is a bear market rally. NJ said we're not out the woods yet. There's a lot to do before we get out the woods, and it's not going to happen this quarter. It's simply not going to happen. All right. We got a CPI next week. I've mentioned that as well. We have got the UN who are asking the Fed to pause, to take their time, not to stop it completely. All right. We've got the dollar at massive resistance. We've got Bitcoin and altcoins that are starting to flatten out. Notice how we're not hooking, we're not trading, we're not hooking. Look at these hooks. Very volatile. The last time that we got these downward sort of straight line kind of price actions is when we broke out to the upside. Okay? All right. And if we invert it, for those of you who don't know how to short, and for those of you who only know how to long, notice here, I'll show you it in another format. Notice here how we've got the big sell off here. We've got the big sell off here. And now we're doing the same thing again. Look at this curve. Look at this curve that we've got here. Look at these curves that we're showing here. Look at these curves that we've got on the left-hand side of the chart. Whenever we flatline and show some sideways price action like this, that's when we tend to get the big moves to the upside. So I'm thinking we've got clear sort of supply and demand here as well. You know, clear supply and demand right here. And that once again comes in at around $13, $14. I don't know. I'm going to let you guys make your decisions for yourself. Do you guys have any questions? The comments have been wanked today, guys. I'm not going to lie. I love you guys. I know I've come late. I know you guys are a bit annoyed that I've come late. We've got half the people, we've got half the viewers in the chat today, but we've got less than half the comments that we usually get. So I'm going to stick around for 2-3 more minutes, and I'm going to see if you guys have any questions, if you guys have anything that you guys want to talk about, or if you guys just want to have a general chit chat, and then I'm going to shoot off. But let me know, what do you guys think about today's episode? Was it good? Was it informative? Was it boring? Did you find any use in it? Let me know what you guys think. I never kind of asked you guys what your thoughts on the NJ show is. I kind of just come in and I'm like, yo, this is the NJ show. Let's talk about whatever I want to talk about. But yeah, let me know what you guys think in the chat. How are you finding the show? How are you finding the growth? If we can already, if you haven't already, please do like the video. We're at 70 likes. We're trying to get to 100. I know we're not going to get 30 likes in this live stream, but if we can get to at least 80 or something like that, the rest of my lovely community who watch these shows recorded, I'm referring to you. If you're watching this recorded right now, you guys can smash the like button for me. Help us get to 100. Reason I ask is because once you get to 100, the algorithms kick in a bit more and it helps you out, helps the video get seen more, etc., etc., etc. But honestly, I really am grateful for all of you guys. I generally don't say it enough, I really am super, super grateful for you guys. You guys give me purpose. I'm really, really loving Twitter. I love YouTube and whatnot, just in general, because I love crypto, but I'm more of a viewer. Having my own show now where I'm speaking to you guys have really given me purpose. I really enjoy what I do, and you guys are the reason for that. So enough emotions, enough Batman antics. Let's see what some of these comments are saying. So we've got, let me scroll up a little bit. We've got the first one up here. Elizabeth, you're quiet as well, my love. Why are you not talking? You're the number one. You and Hafuel are my number ones in the chat. You guys should be talking the most in the chat. So where are you guys at? Come on, mods, wake up. Twinsy says, I'm loving the NJ show. Well, we're loving you, mate. Thank you very much for joining the show. Din, who rhymes with my brother Min from Vietnam, says, great Dixie session, NJ. Well, I appreciate you, mate. Thank you very much. And we've got Liz and Hafu greeting the new members that we've got on the NJ community. Fantastic, really appreciated. We've got Aromatic here who's saying $8 for PYR is programmed. Let's see if we can make it happen. Let's see how the market unfolds. Don't forget, we've got NFP on Friday, and not only have we got NFP on Friday, we've got CPI next week. The Fed could turn around and just say no. Like, that's something that we haven't really discussed in the stream. But if the Fed turn around and say no, we're going to increase it by another 100 BPS. Suck yourself. we're in trouble. I don't think that will happen, but I'm just saying it could. It could. There is a small chance it could. So keep that in mind as well. All right. Um, what else have we got here? Kalyan, thank you very much for your comment there, Kalyan, who says, well, the next FOMC is the 2nd of November, so that's less than a month away. We'll see what happens. We'll see what happens. All right. But don't forget, we've got CPI next week. That could really tweak things, that could tweak things. Okay, Phil. Okay, I like this comment. Phil says, can we get a stream about how to use crypto on our everyday lives? When we get to another stage of bull market, Phil, that's when I'll be doing something like that. All right? That's when I'll be doing something like that. I promise you I will. All right? We're going to be having a lot of fun in the bull market, but my job now, going into accumulation periods and going into bear market rallies and preparing for the next bull run, is to really prepare all of us for the next run. That's my job here on the NJ show. All right. That's kind of what I want to focus on. Making sure that you guys are super prepared for the next Bitcoin bull market, for the next altcoin bull market, so that you can change your lives the way I've changed my life in the last one. All right. Jeremy here says it's your first time tuning in, enjoying the insight. Well, thank you, Jeremy. Thank you, and welcome to the NJ community. Really happy to have you on board, mate. Hafuel says, I like the episode. Very informative. Thank you very much. Samir says, great show, bro. Thank you, mate. Nick says, great stream, lad. Appreciate you. Samir says, any real question, NJ, up or down? I think short term, I'm leaning towards the upside. As long as the news that we have today sticks, and it sticks to the ground the same way snow. When it's snowing, there needs to be a certain temperature before the snow can stick to the ground. Otherwise, it's snowing, and what happens is everything just gets wet, and you don't even realize it snowed. So we've had some snow today. All right, we need to see now if the snow can stick to the ground. If the snow can stick to the ground and the temperature stays low, we'll be Gucci. All right. If not, we'll see what happens. Don't forget, I've got Crypto ISO tomorrow anyway, and I'll be doing a live watch along with the markets, for the markets, during NFP. All right. So we'll be able to deduce what these circumstances are. But for today, I'm leaning towards the upside. All right. Joe says, thoughts on Tesla. Well, Tesla was one of the only stocks that didn't really moon alongside everything else, and I think that one of the reasons behind that was, I think they were late on some numbers or something like that. I didn't really read into it because the news came out today, but I know that they were late on delivering some sort of data or numbers on something, and because of that, I think a lot of people just dumped their stock. So is what it is, right? Lily, thank you for your lovely comment, Lily. Lily says it was great, bullish on NJ. I'm bullish on you, Lily. Thank you very much for joining the shows consistently and leaving your lovely, lovely comments. Joe says, great stream, NJ. More macro. Appreciate you, mate. I do appreciate you. Nick Fedora says, little dip over the next week, then rally. Yes, we are getting a pullback. Obviously, I've kept it on the higher time frame here on purpose so that you guys are seeing what's going on. I don't want you guys to get suckered into the lower time frame. Any pullbacks from what I'm seeing on these charts here today is a buying opportunity. Remember, this is not financial advice. Remember, I'm not telling you what to do. I'm telling you what my thoughts are on the market and what I'm personally doing. If I get stopped out, I get stopped out. It is what it is. You win money in this market and you lose money. You're going to lose more money than you win in this market. But if you catch certain trends at the right time, you will make an insane amount of money. All right. So there's my take on that. Hafuel, beautiful comment here. I'm so looking forward to where we're going to be in 1 year. Me too, my friend. Jeremy says when we are in a clear uptrend, would you wait for a pullback to a certain EMA to enter? Okay, Jeremy, that's a fantastic question, and I'm going to answer that for you live on stream. All right. The way that EMAs and MAs and price action and ranges and patterns and charts, the way that they all work, right? You have different techniques to get on board. I prefer price action. Maybe Hafuel prefers MAs. Maybe those who trade over at the Haven Group, they prefer MAs, right? Trader XO prefers macro. Trader SC prefers price action. All of these ways are profitable, but it's the standard that you use them in. Okay, a lot of people don't understand this about markets, and they really don't understand it. Is all of these are techniques to enter a trade. In order to understand the sentiment, in order to understand which direction the market's going to go in, you always need to be keeping on top of what's actually happening within the global environment. Okay, if tomorrow we're getting news that the Fed is going to increase the rates by another 100 bps, and you're seeing a bullish pattern on PYR, my friend, it doesn't matter what the EMA is saying, and it doesn't matter what the chart is saying, it doesn't matter what the range is saying. You're kind of stupid if you're betting on it. Now, if tomorrow or today you hear news of the UN saying, oh, you know what, we want you guys to take a chill pill on these rate increases. We need to slow down going into the winter because people need to survive. People need to breathe. People need to find a sort of settling foot within the current climate before we bombard them with even more rate hikes. We need to give them a chance to breathe. Then suddenly you can use these techniques, price action, EMA, MA, Hull moving averages, and indicators, RSI, whatever. You can use all of this as a confluential tool to get on board your trade. I hope that makes sense. It's something that people don't talk about very often. It's not an easy thing to hear, but that is how it works. You have to stay overall in touch with the market. XO tells me this all the time. XO says to me, NJ, I can't teach you my edge. NJ, I can't show you exactly what I'm doing, but the best advice I can give you is live and breathe the space. If I'm playing FIFA, the only way to get better at FIFA is by playing FIFA. The only way to understand what the best cards to buy are by watching YouTube videos or by going on Twitter and looking at the social media influencers for FIFA. I love Manchester United. How do I find out what Manchester United's doing? I follow all these guys on social media and whatnot. I keep involved. I'm watching streams every day. I watch Goldbridge every day. I watch United People's TV every day. I'm plugged into the space so that in the future, when people are talking to me about these things, I don't need more than a few seconds to grasp what they're saying. And it's the same with crypto. It's the same with YouTube. It's the same with traditional markets. You've got to live and breathe it. If you're living and breathing it, if you're watching videos like today's video, if you're watching and paying attention to what people are saying on Twitter, reading your own articles and doing your own research, techniques like this will really work in your favor. All right. Price action and whatnot comes towards the end. You got to learn all the main bits first. So, Min, my brother from Vietnam, says, great stream, NJ. What else have we got here? Oh man, Trader SC. That's the best feeling in the world. That's the best feeling in the world. That's a good feeling when your mentor says, brilliant, my bro. SC, thank you very much. A big shout out to Trader XO and Trader SC. I'm not somebody who will say that I did it on my own. Trader XO and Trader SC have been massively influential in my journey. All right. SC has helped me in ways that I can't even reveal on this stream. I will never take credit for something that doesn't belong to me. There are people in my circle who sadly take credit and act as though they did it all on their own. And it's a very, very, very poisonous mentality to have. But you'll never find that here on the NJ Show. A massive, massive shout out to Trader XO and Trader SC for fueling my career within the crypto space, the financial space. One day, I know that this show is going to grow. One day, I know that I'll have more respect in the game, and I'll remember those days as well, that it was XO and SC that held my hand throughout it all and who really pushed me to survive. I'll tell you one interesting thing, guys. 3 years ago, and SC, I bet you don't remember this one, right? 3 years ago, SC contacted me on Telegram. He goes, what are you doing? I said, yeah, bro, I'm just getting ready for the stream. He goes, yeah. Listen, I'm going to send you my software, Camtasia. This was 2018, yeah? This is 4 years ago. He goes, I'm going to send you my software, Camtasia, and I'm going to give you my PIN for it so that you don't have to pay for anything. What I want you to do is I want you to set this up on your computer, and I want you to just try to do something. Just try. I was new to the game. I was new to the space. My confidence wasn't where it was today. Neither was my conviction. I didn't follow through. But today, I'm here. I'm here in front of you guys on YouTube. I'm not afraid. I'm not afraid to have big personalities on the show either. And it just goes to show you how important networking and family is in the game. So all of you guys in the chat right now, communicate with each other, converse with each other. One of you guys could be the next XO or SC if you really put your foot down and try. Or at least you can inspire somebody else to as well. So I won't waffle on any further. Let me have a look at more of these streams, more of these contents, more of these comments. Gov says, love from Cardiff, bro. Love, mate. I appreciate you joining from Wales. Thank you very much. That's lovely to hear. La 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 la. Cleo, thank you, Cleo, for joining the stream. I appreciate you. See you tomorrow. Crypto ISO is going to be on tomorrow. So yeah, it's going to be a fantastic episode tomorrow. So make sure you're all tuning in. Rightio, I am going to I'm going to go. All right. So I love you all, and I'll leave you all with all the content that we've shared today. Like the video if you haven't already. As I mentioned, we're on our way to 100 likes. We're 23 likes away. I know that we're not going to get that on the live stream, but if you're watching this recorded, do your part for the NJ show. All right. Leave a comment if you can, and subscribe to the channel. We are at 4,000. We're nearly at 4,400 subscribers, which is 12 away from where we are right now. Okay. So we need to hit 12 subscribers. So if you're watching this live, or if you're watching this recorded, do your part. Hit the subscribe button. We are 12 subscribers away from 4,400. Let's get that today or tomorrow, or at least this week. All right. On our journey to 5K subscribers. I love you all. Take care. Have a lovely, lovely day. I'll see you in less than 24 hours for the show with ISO. All right. Cheers, everyone. Bye. Peace. Goodbye.